All right. I hope you guys are ready, man. We have a lot to cover in this video. We have 10 stocks, 10 companies to break down, all of which are reporting earnings this week. So you guys know the drill. We're going to break down the estimates for earnings per share, revenue, the stock charts, what I'm looking to do. And if you guys thought last week was a big week, it was. I mean, no doubt it was. But this week, it's going to get crazier, guys. It's going to get crazier. So let's dive into it. If you all find value, hit the like button. Do not forget to subscribe. And of course, take a sip of your coffee. Come on, guys. We got the double espresso on deck. And if you want some free stocks from Moomoo, open up your account using that link down below. Once you deposit at least $100, you get 5 free stocks. And deposit at least $2,000. Get this, guys. You get 25 more stocks, totaling 30 stocks. So if you guys want some free money and you want to help out the channel, check out the link down below or go to stocksurfast.com/Moomoo. And with that being said, guys, cheers. It's going to be a long one. Let's get into it. So you guys know on Friday, the markets were a freaking roller coaster ride, right? We opened up green across the board on the indexes, right? And then, well, it didn't end off that way, right? If we pull up here on the intraday on SPY, we hit 610 pretty much, right? This is the S&P 500. That was the intraday high. And then we got down all the way to 598. So we dumped $11, $12, about 2% in the span of a couple of hours here, right? And this is after we got news that, well, Trump tariffs are coming, right? Trump and tariffs, those two, they go hand in hand, right? It seems like. So now that Trump's in office, right, we're going to get tariffs. I think by February 18th on oil and gas. I think chip tariffs are coming as well down the pipeline. Who knows whenever that's going to happen or when that's going to happen. But you guys know tariffs could potentially be, I mean, they are, right, inflationary. So we got a bit of a scare in the markets. The VIX went up. We sold off a good chunk. And this week, man, coming up tomorrow, Monday, well, this could potentially bleed into next week or this week coming up here. Maybe a little bit. We'll see. But with that being said, guys, SPY is still above the 180 SMA. Yes, it looks like we do have a double top here and a dump off, which is not ideal. But I'm going to be eyeing up this 180 SMA on the 4-hour chart here for this week. Will buyers come in between 590, 600? This $10 window? That's the $1 million question for the S&P on SPY for this week. So enough of that, guys. Enough of that. Let's just get into it, man. 10 stocks. Yeah. Buckle up, man. Get ready. Get your popcorn. Get your water. Get your coffee. Whatever you guys need. Let's just get into it, man. So number 1, Alphabet, which you guys know, especially if you've been watching my channel for a couple of years now, you know this is... It used to be my biggest individual stock holding a couple years ago. It's still top 3 or 5. Yeah, top 3, right? Or 5. I think it's top 3. Either way, it used to be the biggest one. It's not anymore, but that's because other stocks have grown. Maybe we'll talk about that in another video. But Google's one of my biggest holdings. We'll leave it at that, right? And their upcoming earnings are on this Tuesday after the bell on the 4th, right? Let me double check that. I'm positive. Yeah, on the 4th after the bell. And guys, we're looking great on the charts heading into earnings. You guys see here we have an ascending triangle breakout. You guys see that already happening before earnings, right? We were in this triangle for a good, month and a half, right? Now we're starting to get out of it, break out of it into earnings, which, I mean, guys, if earnings crush, this could go even higher, in my opinion. A lot higher, right? This breakout could really start to extend, right? So we hit all-time highs a couple days ago, or that might have been on Friday. Yeah, I guess that is a couple days ago. One trading day ago, we hit all-time highs. And I think, again, momentum will continue if they crush earnings, especially if guidance is good here for Google. And looking at the other big tech names, although, I mean, it's not guaranteed they'll play out very similarly, but when Meta reported earnings, this stock shot up to all-time highs, very big move. Apple did as well, not to all-time highs, but it did shoot up initially to 250. Now we're back to 233. Apple is selling off now from that high, but initially it popped. So if we're judging off that, Google might see something similar. Obviously, it's not guaranteed, right? I mean, they could bomb earnings for all we know, and earnings, the stock dumps, but EPS is projected at $2.13 versus $1.64 from last year on Google. On revenue of $96.67 billion versus $86.3 billion from last year. So Google's revenue is growing 12% year over year, which, guys, for the size of this company, man, that is very impressive. So, yeah, keep your eyes on this triangle. It's already playing out into earnings. And, again, if guidance is strong, expect this to continue. At least that's what I'm thinking, guys. And I was buying the stock up in the 150 to 170 range during this, dip, whatever you want to call it. And now, for me, I'm not buying more at these levels, but I'm just holding on. And another one here, the most important one, arguably, for this week is Amazon, ticker symbol AMZN, which I'm also long. Amazon, I mean, this is a stock that you guys know, if you've been watching my channel, I mean, this is a stock I started loading the boat on, I believe, in 2022 into 2023 when the stock was in the 80s, 90s. Yeah, right around here, guys, I was buying this thing like a madman. And I'm very happy I did, because now we're at 240. We're up a lot on the stock. And I bought, it's not like I just bought in the 80s, 90s. I mean, this is a stock I bought on the way up, too. I initiated my position in the 80s, 90s, right? Bought more in the hundreds. I even bought more on this dip here, man, in the 150s to 70s to 80s. I was buying recently, so Amazon's always a company I've loved. I didn't own it until, again, a couple of years ago. That's when I started really buying it. And for me now, at these levels, it's a hold. And honestly, both of these stocks, Google and Amazon, are holds right now. I wouldn't buy them, like I said, for Google at these valuations necessarily. But, these are both stocks that I was loading up on in that 2022, 2023 time period. And I owned Google before 2022. I just bought a lot more during that time. But Amazon, I didn't own before 2022. I just initiated it in 2022. Or maybe I did own it like years ago. Obviously I've traded Amazon. I mean, I've been in the stock market since 2014, 15. So, I mean, there's been times I've traded these stocks, of course, but I don't think I've held Amazon as long as I have now, ever. I mean, I'm sure there's been times it's been in my portfolio for a couple of weeks, months as a trade. But now, I mean, it's been in the portfolio as an investment for a couple of years, and that's the way it's going to stay. I'm not selling the stock. I'm just holding on to it. Earnings per share are expected at $1.49 versus $1 from last year, guys, on revenue of $187.25 billion versus $169.96 billion last year, up a whopping 10% year over year. Not bad. And just like Google, guys, Amazon, we're seeing an ascending triangle breakout on the 4-hour chart, heading into earnings on Thursday the 6th after the bell. So, yeah, this is looking pretty good, and it's also at all-time highs heading into earnings, just like Google. So keep that in mind, guys. And PayPal is another one for this week, which they're on Wednesday, or no, they're on Tuesday. Yeah, they're on Tuesday in the morning. PayPal is expecting earnings per share of $1.12 versus $1.48 from last year. So EPS is projected to contract for PayPal year over year. Keep that in mind. And revenue, the estimate, excuse me, guys, I might need some freaking coffee here. The video, we're already 9 minutes in, only 3 stocks in. So, yeah, we're going to be here for a little bit. Cheers, guys. Revenue-wise, PayPal's projected $8.28 billion versus $8.03 billion from last year. I keep saying expected. I was doing that in last week's video, I think, too. But that's up 3% year over year. Not much. PayPal, guys, yeah. I mean, I don't know about this one. I use the product, right? I use PayPal. Not as often as I used to, quite frankly, but I still use it. And in terms of the stock, I don't own it, nor do I plan on buying it. I mean, this is a stock I used to own before the massive run-up. I mean, you guys may or may not remember, I bought this stock. I think it was in 2019, 18, 2021. You guys probably don't remember that. But I bought it then. I think I sold out on the way up here, actually on the way down too. Thankfully, I did get out of it on the way down here because, it has not been pretty the last couple of years, and I don't know. I don't think it'll be easy for PayPal to get back to 300. I just don't see it happening. So for me, I'm staying away from it, but obviously I'm watching the earnings as it is a big company worth watching, guys. And Spotify is another one I'm looking at. We're at, oh my goodness, all-time highs heading into earnings. The stock has doubled up in just the last couple of months, which is nuts. This is Spotify. SPOT is the ticker. Earnings are coming up here on Tuesday in the morning. So Spotify is projecting earnings per share of $2.06 versus the loss of 36 cents from last year. Not the best last year, but they're improving on that big time. $2.06 earnings per share. So great improvement there projected for Spotify on revenue of $4.15 billion versus, let's see, $3.67 billion from last year. That's up 13% year over year, guys. That's pretty good, man. Pretty good for Spotify. And I love Spotify, man. I don't own the stock. Maybe I will one day. But in terms of the service, I was an Apple Music guy through and through for freaking years, guys. Years. And then my wife got the family plan like 2 years ago for Spotify, or a year and a half ago. And I'm like, why am I paying Apple Music if she's got the family plan? Might as well try out Spotify, cancel Apple Music, save that $10 a month, $15, whatever the heck it was. I don't even remember. And yeah, I haven't looked back since. Spotify is awesome. Honestly, I think it's better than Apple Music, and it should be. It should be better than Apple Music, guys, because this is their sole business they're focusing on, right? Spotify, they're focused on their business, right? Which is, music, podcasts, the app, the streaming, so whatever, And Apple's got iPhone. They got this, the wearable services, this, that, the third. Apple Music's like at the bottom of the totem pole pretty much. So Spotify should be better than Apple. It is better than Apple. A lot of people are realizing that. They have been. And yeah, the business has been doing well. Look at the stock price, man. Oh my gosh. So AMD is stock number 5. AMD, I own this one. I've been buying the dip for a couple of months now. I started buying the stock probably 8 months ago. And yeah, it's one of my only red. I think it might be the only red stock, no joke, in my portfolio right now. With this crazy bull market we're in, AMD has not been participating. Earnings per share for AMD this quarter, which they're reporting, I think, on Wednesday. Let me double check that. No, Tuesday, after the bell, same day as Google. EPS is expected at $1.09 versus 77 cents from last year on revenue of $7.53 billion versus $6.17 billion from last year, up 22% year over year, guys. So AMD, I think, is a sleeper pick right now. I mean, everybody knows about AMD, so I guess you can't say it's a sleeper, but in the AI infrastructure space, the data center space, I just think AMD is a little overlooked right now, and I think there is some value here, so that's why I've been buying it, but I'm not going overboard. It's not like I'm going to keep throwing my money at this, chasing the dip until it becomes such a big position that I'm like, oh my God, why did I buy this much? That's something I would have done like 8 years ago, right? When I first really was getting in the stock market 8 to 10 years ago, right? 8, 9, 10, whatever. That's what I would have done, chasing good money after bad, quote unquote, what some people might call this. But now I have it capped at about like 3 to 5% weighting here on AMD in my position or in my portfolio. And that's where I'm going to keep it. If it dumps even more, all right, maybe I'll add a little bit more to kind of keep it in that 3 to 5%. But I'm not going to go overboard and make it, a huge position just because it's down. Because who knows, man, it could get worse. We don't know. Stock market investing, trading, it's all about risk management. Building building your portfolio a specific way. And if you go too all in on a stock that's been a loser, AMD's been a loser, guys. That's the reality. You can get screwed badly if it keeps going wrong. So that's why I'm keeping it at 3 to 5%. And we'll see how it goes. Revenue's projected to grow 20%, 22% year over year. Not bad. So Snapchat is another one here. And before we dive into it, guys, make sure to join my email list. It's free, and I send out my top stocks weekly right to your inbox, your email, guys. All you have to do is put your first name and your email address using that link down below. Make sure you guys do it. Again, it's free. It's a no-brainer. So Snapchat, they're on, I believe, Thursday. They're always on Thursdays, right? Let me double check that. No, geez. I'm wrong. Maybe Tuesday. Maybe they're always on Tuesdays. But they're on Tuesday the 4th after the bell. Snapchat is projected earnings per share of 14 cents versus 8 cents from last year on revenue of $1.55 billion versus $1.36 billion from last year, up around, 14% year over year. I'm not a big fan of Snapchat, guys. I'll be honest. Growth is slowing down. And this company is notorious for going bananas on earnings in either direction. The stock, shall I say, is notorious for going bananas, right? I mean, look, 2 earnings reports ago, it went from $14 to $8. Yeah, shortly thereafter earnings. And then last time they reported earnings, it went from $10 to $13.30. So it's like, man, talk about a gamble stock on earnings, man. So I'm not a big earnings trader. I'm not buying any puts or calls or shares before these companies report earnings. But, hey, once earnings come out, we get the reaction from the stock. We get the sentiment, right? Then I might trade it. But for me, guys, Snapchat, I'm just simply watching it. And to be honest, I'm not the biggest fan of Snapchat. I think the app is a bunch of just brainless, mindless, slop content, whatever the heck you want to call it, guys. It is just the most brain-rotting content, Snapchat. It really is. And obviously it's geared towards Gen Z, the younger kids, right? I mean, I'm freaking almost 30 now, but I don't really consume Snapchat, but sometimes I go onto it to look at it for research purposes. I mean, this is kind of what I do, guys, and it is awful. Snapchat freaking sucks, man. It's just a bunch of young girls, young dudes posting these thirst trap pictures, for you to click all throughout their stories so you can watch all this BS slop crap content they're posting. It just sucks. I'm not going to lie. Snapchat freaking sucks. And that's why the stock has been where it's at now for years. Years, man. This stock, it hasn't gone anywhere in damn near a decade, guys. A decade. Yeah, there's a reason for that. Yeah, there's a reason for that. So I'm never going to invest in Snapchat. There's no shot. But maybe I'll trade it. Who knows? Chipotle Mexican Grill is another one worth watching. I mean, I love Chipotle, the food, but it seems like ever since they've done their 50-for-1 split, the stock has not been doing well. The stock has not been doing well. Maybe we'll get a reversal on earnings. We are a bit beaten up here. We'll see. Earnings are on Tuesday after the bell for CMG. They're looking to do earnings per share of 25 cents versus 21 cents from last year on revenue of $2.85 billion versus 2.52 billion from last year, up 13% year over year. Not bad for Chipotle, not bad, but I don't know. Is that enough to justify their valuation? It is pretty high, and it is a burrito, Mexican fast casual spot, if you will. So does that warrant that high of a valuation? I don't know. But Chipotle, man, 14%, 13% revenue growth is expected. Keep your eyes on it. We're battling at this moving average on the 4-hour chart. I'm going to set my alert at $60. I think if we're able to successfully break out of there could be more momentum on Chipotle Mexican Grill. Maybe, just maybe. Now, Uber. Let's get to Uber. UBER is the ticker. Pretty easy to remember, right? I'm sure all you guys knew that anyway. But Uber is this week on, I believe, Wednesday or Thursday, maybe Thursday. Let's double check that. Wednesday. There we go. Got it right. Finally. Wednesday in the morning, we're getting Uber's earnings. They're projecting earnings per share of 48 cents versus 66 cents from last year on revenue of $11.78 billion versus $9.94 billion from last year, up a whopping 18 to 19% year over year. Pretty good growth for Uber. I mean, they've been around forever, it feels like, and they keep on growing. Cheers to that, man. So let's keep on looking here at the chart. I think we have an inverse head and shoulders. You guys see that here in the making on, this is the 4-hour time frame. You guys see we have the left shoulder, boom. Got the head right here. If it wants to work, come on, Uber. What's going on, man? There we go. Then the right shoulder is right here. It's kind of a lopsided inverse head and shoulders, but it looks good. Nonetheless, it does look pretty good here, and I'm thinking, hey, we take 70 out. If we do, I'll set my alert there right now. I'm thinking if we do take that out, boom, we might be making this kind of move right here, right? A breakout towards mid-70s, high 70s. That's where we could be going. So 18-19% growth is expected. Uber is very beaten up since, October. So, man, expect a breakout here if guidance surprises or if they surprise at all, because the stock is very suppressed right now in the short term. We also have Disney, which I feel like I have a love-hate relationship with this stock. I'm not in Disney anymore. I used to own it for a couple of years, man. Made some money on it. Honestly, not what I was expecting, so I sold out of it. Sometimes, man, you got to cut your losers, right? And you got to do it fast. Disney I held for a little bit, a couple of years. Probably should have sold that one earlier. But I did buy Nike, right? I did buy Nike. And then I realized quick, in a month or two after buying it, I'm like, this is a mistake. Why am I in Nike, right? There's so much competition, so much going on. The business is struggling, kind of similar to what Disney was doing a couple years ago, right? So I learned from my mistake buying Disney, holding it, not making a crazy return like I feel like I should have, right? I learned my mistake there, and I applied it to Nike. I bought Nike, I forget how long ago it was. Probably 6 months ago. Yeah, I'm pretty sure I bought Nike after this big dip here. In the low 70s. I might have came out with it with a little profit, but once it ran up a little bit, I'm like, yeah, I'm out of here. It took me a month or two to realize I'm out of here. And thank God I did, because look, months and months later, we're back to where I initially bought it on Nike. The stock is dead in the water right now. And I'm not a big fan of Nike as an investment here until they're provably able to turn things around and get back on the right track, which, I mean, look, Nike stock is the same level it was at pretty much 7 years ago. Same case with Disney, essentially, right? Yeah, I mean, Disney's the same level it was at 10 years ago. Think about that. And, yeah, I mean, that's the situation with, Disney. I think the company's great in terms of the parks. They're able to bring in eyeballs and, attract a lot of customers, but I don't know. There's just the stock sucks. I'm just gonna be honest, man. It doesn't matter. The business could be good, right? The stock just sucks. So I'm not in it anymore. Disney's EPS is projected at $1.43 versus $1.22 from last year on revenue of $24.55 billion versus $23.55 billion from last year, up a whopping 4%. That's what's projected. And man, the way Disney has been trading, I wouldn't be surprised if they report numbers and boom, we're back to the hundreds or 90s again. That's kind of what the stock's been doing for a decade now. I mean, we did go to 200. We ran up there during the pandemic, I think. But, it was short-lived. It didn't last. And we cut in half plus more from that point anyway. We hit 203 during the pandemic era. And then we went all the way to 81. Yeah, I'm not a big fan of this stock. And that's something you guys will learn as time goes, right? As you get more experience in the stock market. Just because a company's got great products, you enjoy their services, it doesn't mean their stock is good. It doesn't mean you go and buy their stock, right? At least in my opinion. I mean, Disney, I was going to say Google. Google's great. Their products are great. Services are great. That's one that you could go buy the stock, right? Not telling you what to do. But Disney, I just don't like the stock, at least the way it is now. Maybe if it goes to like 60, 70 bucks, maybe I'll buy it at a cheap value at that point. But where we're at now, I'm not loving it. ARM Holdings is the last stock. And guys, we're 26 minutes in. I can't remember the last time I filmed a video this long. I think when I first started my YouTube, I mean, we did long form content like this every day, like 20, 30-minute videos. But it seems like with the attention spans these days, right, I've cut my videos short. They're like 10 to 12 minutes at most now. But maybe I'll start bringing back some of the longer content like this. Let me know in the comments if you guys are interested. Hit the like button as well. Make sure to subscribe here on YouTube. That shows me that you guys want more content like this. So ARM Holdings, they're projecting earnings per share of 34 cents. And wait, I forgot to mention, Disney's on Wednesday, right? I don't think I mentioned that. Let me double check. Hold on. Disney's on, yes, Wednesday in the morning, so keep that in mind. And ARM Holdings is on Tuesday or Thursday. They're Wednesday too. Wednesday after the bell for ARM Holdings. So they're projecting earnings per share of 34 cents versus 29 cents from last year on revenue of $947 million, up from $824 million last year. That's up 15% year over year. Pretty good, guys. Pretty good. And ARM Holdings is already breaking out, heading into earnings like we've covered in recent videos, right? You guys see here, we're breaking out of the wedge. We have a golden cross. We're above both moving averages. Guys, what more could you ask for? This looks phenomenal. So those are 10 stocks. Yeah, 10 stocks, man. And the funny thing is we could go for another 10 stocks because there's so many more worth talking about. But those are the 10 most important ones that I'm looking at, although I'm not in love with all of these businesses. That's not the point. The point is they're worth watching, right? I'm not going to buy all these stocks, but I'm watching them for this week because, again, they're all reporting earnings, and you guys got to keep your eyes peeled on them. So let me know your thoughts in the comments, guys. Run the likes up. Don't forget to subscribe and snag up your 30 stocks for a Moomoo. Once you open up your account and deposit at least $100 using that link down below, you get 5 free stocks. And once you deposit at least $2,000, you get 25 more stocks, totaling 30 stocks, and your uninvested cash for now will earn up to 8.1%. Guys, it's a no-brainer. I'm telling you, man, use that link down below or go to stocksurfest.com/Moomoo. And with that being said, cheers. I'll catch you guys in the next video.